Hello and welcome to Pro Trader Strategies Market Commentary for Monday, July the 10th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, it is a Monday, not a whole lot of economic data out there to drive the market, but everybody should be happy because the broader markets are up across the board. As we can see here with crude oil futures up 37 cents, 36 cents, and give or take, hasn't made that newer low. So that is going to be what the bears are trying to get. Later on this week, we do get crude oil inventories, but in the meantime, there is still a glut of oil out there. Despite the last reading we got was a big drawdown. So crude oil is fighting and clawing its way, really battling it out. It was in negative territory early on today, but as the broader markets have turned, it's kind of like this market has turned as well. I thought it was going to be one of the ones that stayed negative on the day, but it's not showing that right now. Now we have the gold futures up slightly, about $2.50, give or take. Still looking at this possible head and shoulders type of pattern going on here. One could claim that it's really more of a tweezer top here, but this didn't really break above the high here. So one could, it's a little bit gray. It's not like a perfect setup right now, and we definitely would need to come down below this area to complete that pattern. So somewhere below 1200 in order to kind of start to make that look a little bit more complete, if you will. Maybe even one could say down here into the 1180 area. All right, but gold futures up on the day as well. We've got the bonds, again, positive by only 11 ticks, getting stuck right here at the point of control, which is where I thought we were going to be spending a lot more time because the Fed has indicated that they're going to continue to increase rates. And when the market is rallying in the bonds, say, that's taking out probabilities of those rate hikes. Now, this week we do have Janet Yellen speaking or testifying in front of Congress. We also have several other Fed governors speaking, so that could get a little bit more information as to what they're really thinking. I think Bernard is even speaking tomorrow. He's one of the first ones to start, and then Janet Yellen starts her testimonies. All right, but bonds up slightly, but right there at the point of control. Dow Jones up 24 points, albeit that's not a big move for the Dow Jones. It is positive on the day and back above that 5-day moving average, making it really look like it is trying to move a little bit higher. And then we've got the NASDAQ probably leading the way up 35 points on the day above the 5-day. Now we did get this little bit of a cross here, which is a slight bearish tone. So the bulls are going to want to get above that 50-day moving average and try and peel that back into line, which is kind of what you see here. It's a little bit slow moving, but we could easily see that happening, especially if we start trading up into the 5,800 area. Then the E-mini S&P is up 5-6 points, give or take, but well above yesterday's high, or well above, the 5-day moving average. That is going to now act as support, and we're right there back to this volume node, so could be starting to build that out. Economic data is light earlier on in the week, better going forward later on in the week. And if we look at the 30-minute chart of the E-mini S&Ps, you can see we pretty much retraced the entire day session or the overnight session within the day session. We got a little bit higher to go to print those overnight highs, but it looks like that's probably pretty sure to happen. I know a few things that I've done now. On Friday, I covered this Verizon. I actually talked about this in the webinar just briefly, which was on the short call spreads. It was a great one. I think a lot of people took a lot away from it. As a matter of fact, it was fully subscribed, so if you weren't able to get in there, that's why. It was because it was oversubscribed in a sense. So that's one reason, I guess, getting in there early is so that you don't get bumped out or locked out. But anyway, with Verizon, if you guys remember, I had on the July was long the 47 puts and then short the 42 puts. Now, with that, I ended up paying $2.40 for that strategy. But with that doji here, now, of course, it wasn't confirmed as a bottom, but this doji at any extremes has a tendency to really act as support. That's just a very bullish doji. So I, didn't want to wait to get it confirmed. I just covered it probably a little bit earlier, probably cover it a little bit better today, but again, it's not confirmed to the upside, so if you want to ride that out, you can do so, but I've already gotten out of it, and I got out for $3.35, so not quite the 50% of max profit that I'm looking for there, but at the end of the day, a dollar gain is a dollar gain, right? So I covered the Verizon maybe a little bit earlier, but I'm not going to look back on it. TBT is also a trade I added late in the day. I saw something come across where was some unusual activity in TBT. Now, TBT is inversely related to TLT. Now, you know that I've been bearish on TLT. So this market is inverse of that. So as the market, it's basically a triple leverage. So if we're going to get more of a pullback in TBT, it means TLT might have a tendency to take a little bit of a bounce. But there was a lot of volume in there, 37,000 contracts traded in TBT at the August 37 put. So I decided to go in there and maybe make it more of a little bit of a hedge against my TLT and paid $1.02 for it. Now today with the theta decay and everything else, you can probably get it a little bit better despite the fact that it is slightly down on the day. But TBT, looking for it to come down a little bit. And if not, then I'm kind of right there. So I just need a little bit of move to make that a good trade. Then with NVDA is one that I covered today. And if you remember, I had on a strangle in there and decided to just pull it or pull the ripcord on it because I'm at 50% of my max profit on it. And with NVIDIA, if you remember, I was short the July 138, 170 strangle in there, and originally sold it for $2.78. Remember, I did that when the volatility was increasing, which it really hasn't abated really, but directionality came back into that middle of that range. But if you can see on the chart here, my 138s were being tested. Now, because I collected such a nice credit for it, I wasn't really too worried about it. But today we got that nice little bounce up to the value area high. It came right in line with 50% of my max profit on that, so I covered it. So out of NVIDIA, that one worked out quite nicely, despite the fact that it didn't look very good in the beginning. But remember, we're playing the probabilities here. I knew the probabilities were still in my favor. I could always, the beauty in that strangle is I could always roll down those 170 calls, collect a little bit more credit if things weren't working out very good. But I stuck with that one and played the probabilities, never really tested my break even on that NVIDIA trade. So I was off the hook there, if you will. So if you watch my videos on these, I talk about when and where it is to be mechanical and start rolling those trades to collect more credits and things of that nature. It didn't breach that, so I stayed with my rules, and that ended up working out nicely. Now on to Walmart. Walmart's just one that's just not really wanting to work out very well. I thought we were going to get more of a bounce out of Walmart. It really took a hit when Amazon came out with the news that they were going to buy out Whole Foods, which could negatively affect the grocer part of Walmart. I don't think that's the case. I think Walmart's got a pretty good thing going there. I don't think Whole Foods is big enough really to take that market share necessarily away from Walmart. So I thought that they were going to get more of a bounce, which it did in a sense, but before it got to a point where I was going to be losing money on this, I decided to pull it, especially with today's market activity breaking below that value area high. Decided now is the time to get out while the getting's good. And I had on the September and was long the short the 72.5 puts in there, and I originally sold them for $1.60, bought them back today for $1.55. So made a slight profit on that, but it's really too close to the market for me to be really comfortable, especially just because the way the chart's setting up just doesn't look too good. So I just decided to pull the ripcord on that, got that gut feeling, and pulled the ripcord on it. Then Texas Instruments. This is another one I covered. 50% of my max profits are right in line with my rules there. Texas Instruments, ticker symbol TXN. I had on the, the July 70 puts in there. I sold the July 70 puts in there. I believe it's the 70 puts. Maybe might have to check that. Could be the sold the July 72 puts. It's either 70 or 72 puts. I'll have to double check on that. But anyway, decided to cover that with that nice little bounce that we got today. And that ended up working out quite nicely. Actually, it's the July 76 puts. Because remember, I am short the July 76 puts, and then later on, I have on the July 77.5 puts as well. So I added the 76 puts later when we got that market move it down. It came down, tested those 77.5 puts, threw on another trade. Thought that this 200-day moving average would hold the market up, which it did. It acted as support quite nicely. So those 77.5 puts I still have on. I sold those 77.5 puts for about 87 cents. Sold the 76 puts a little bit later when I got tested for 80 cents. Bought the 76 puts back for 39 cents. So 50% of my max profit on the 76 puts. The 77.5 puts really still aren't out of the running yet. They're very close. They're out of the money, but I need a little bit more even of a bounce before I get 50% of my max profit on that. So that's all I've gotten done today. I haven't added too many trades, pretty quiet in the markets, and I haven't found a whole lot of opportunity. But this Friday, we're going to be doing a webinar on this short put spread. So it's going to be great for high implied volatility markets. I'm going to show you how to even build this out to increase your risk parameters. So if you're a newer trader and you like to really go out there and you're comfortable with buying puts and things of that nature, or buying calls for directionality, I'm going to show you how to do this and increase your probabilities of success. With short strategies where you're collecting a credit, your probabilities of success are so much better than if you're out there just trying to buy calls and things of that nature. Somewhat like what I did in TBT. I went out there and bought some puts. Now, I know that's a low probability of success strategy, but every once in a while you can throw those in there. You just don't want to make that your main strategy in any portfolio, because it's really a low probability strategy. But I know those risks going into it and was willing to accept it with this particular trade. All right, so that's all I got for you guys today. Go to protraderstrategies.com, sign up for that short put webinar, and get in there earlier because we've been oversubscribed for the last couple of them. All right, that's all I got for you today. If you can't take that, take it easy.